Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 9th Commitments of Traders Report of 2026. And as we always do, we're going to start off by looking at the largest changes in commercials net positions. Before I jump to the review, just a brief reminder for anybody who is new to COT analysis here at COTBase.com. You'll find a lot of educational material, not only in written format, but we actually have some very useful videos as well that can guide you through the analysis process step by step. Of course, if you have any questions, we're here to help you. Please comment underneath the video or send us an email to info@cotbase.com. I'd also like to mention that we have some unique indicators that we developed based on COT analysis. And actually, I'm going to start with sort of answering a question about crude oil and just showcasing what this indicator can do. For those of you who are, of course, used to COT analysis, this should be a little bit more straightforward. So we have these lines underneath the chart. We can call these COT index charts. It is not directly from CFTC. It is our own charts. We call them iCOT scores lines. But you can think of the red as hedgers, commercial participants, and green as large speculators. And this is crude oil. We will be talking about crude oil later in the video, but this is the more traded light crude oil market. This is a daily chart. And as you can see, when we have an extreme, it tends to coincide with a bottom. And when we have a bearish extreme, that usually is a precursor for a top. What you can do is you can put the signals on the chart itself, and that will actually help you identify those best opportunities. When we have speculators at an extreme, that's shown by the candlestick changing its color to blue. If we have a yellow diamond, as you can see over here underneath the candlestick, then that's a bullish extreme from commercials. If it's above the candle, then that's a bearish extreme. And when we have both at the same time, we can have these vertical lines we call stripe signals that are the strongest of them all. Of course, you can always modify the signal limits and come to some even more precise signals. This is going on just to showcase a 1 hour chart. This is actually our more advanced indicator, the iCOT Intraday Indicator with AfterSignal. It basically filters out the signals and helps you identify the best time of entry and, of course, exit. Once again, we have these beautiful stripe signals. Red, of course, indicating a bearish opportunity, whereas a green would be a bullish opportunity. So I think these are very successful signals and a great supplemental tool. This is a 5-minute candlestick chart. We're still on crude oil. You can see some amazing buy signals, some amazing sell signals, and of course the indicator helping you identify exact entry and exit points. This is a crazy 15 seconds chart. Not to say something that is suggested, but it's definitely doable, and the indicator has been developed for this purpose. But let's move on and start our analysis, the classic COT analysis part of the video, with cotton, which as you can see is on top of our list with a huge 54% change in commercials. We are analyzing net positions, and this is the classic report. So it divides open interest into 3 main trader categories: commercials, who are of course in the markets for hedging purposes. We've got large speculators, and then non-reportables, who we call small speculators. We're analyzing futures and options data combined. Let's get started. So cotton, 54%, huge change size based on the number itself. But if we open the chart, we get a visual confirmation that on this 1 year time horizon, if we look at the 2 extremes, at least on this 52 weeks, this change in case of commercials, I'd say roughly about 30,000 contracts. By the way, you can actually check everything if you put the chart tooltip on. Then of course, it's going to be even more precise. I don't usually put it on my charts because it kind of blocks the chart a little bit, but if you wanted to, you can see that the specific numbers are 54,257 report net long last week, down to 26,122 contracts net long. That's in just 1 week for commercials. In case of large speculators, pretty much the opposite. They were at 56,567 contracts net short, decreasing that net short down to 31,006 contracts net short. Of course, the difference is always there in non-reportables. It's a zero-sum game. Anyways, I'm going to take the chart tooltip off because it's bothering me a little bit. And of course, conclude that this is a bearish COT change signal suggesting weakness coming in the near term. Moving to a 5 years chart, this gives us the opportunity to see stress levels. You can see a very clear bearish extreme back over here 2 years ago, signaling this top. We've moved away from those extremes and we've been in this bullish territory for quite some time. I would still say that's the case. Now, of course, as you can see, sometimes you do need to wait quite a bit for the signal to take its effect. Yeah, it's just, at these levels, COT report suggests cotton can easily go higher. Even with this 54% bearish change signal, that may push the market lower in the near term, but in the medium to longer term, I'm talking weeks, months ahead of us, we may see cotton finally react to these more bullish readings. Moving on to wheat. This is, of course, the Chicago wheat contract, 1 year chart. Here we go. Once again, a bearish change signal, much greater than average, the largest change in the past 1 year, suggesting weakness coming early next week. Here, the case is more neutral. So if you look at commercials, we had the most bullish COT Extreme over here in May of 2025, and we had the most bearish extreme around this top back in May of 2022. We're pretty much in between those two. The last extreme was this bullish one from January, which, as you can see, seems to be taking its effect and the market is moving higher. We're going to jump over the wheat complex that basically combines COT data for all the different wheat markets we have. Rough rice, interestingly, we have a 34% change, but in the opposite direction. It's a bullish change signal. One thing, what's not so nice about this signal is we've already seen the market react. So, of course, the report date is here. That would have been fabulous to see that change on a Tuesday. But by the time we saw it, we've already seen a rise. It doesn't mean this cannot continue on in the next few days. 5 years chart shows us that we are still leaning towards the bullish side of the market, not surprisingly, since we are coming down from some highs back in 2024. Moving on to large speculator COT extreme analysis. We've been talking about the Australian dollar in the past few COT reviews. This extreme that we were talking about just has grown to greater levels. It is a bearish extreme, and we are expecting the Australian dollar to cool off of these levels. Natural gas, 310 report extreme, quite significant. Let's open a all-time extreme. You can see that this is pretty much in that territory of really, really significant extremes. 200,000 contracts almost net long for commercials. And of course, as the market is coming down, we're not surprised to see that bullish extreme. I can imagine this decline continuing on for the next couple of weeks and months ahead of us as the extreme is widening. Crude oil. So now we're going to analyze the Brent crude oil 5 years chart. Bullish extreme over here, suggesting higher prices coming. That is going to be all for this review. I hope you enjoyed it. If you have any questions, don't forget we're here to help you. Feel free to comment underneath the video. If you enjoyed the video, please hit the like button and consider subscribing, because if we do come out with new video content, you would be notified, and you can watch those videos. Thank you so much once again for your attention. Have a wonderful weekend. Take care. Goodbye.